All right, welcome back to Robinhood Stock Market Watchlist Group. My name's Carlos. We also have Dave here with us. Dave, go ahead and say hello.
Yeah, thank you. Thanks for having me. I appreciate you having me back. I love being a guest.
Absolutely. And then today is April 14th. It is Sunday, so we always like to have our stock market meetings. That way we can kind of plan ahead, because part of doing this is we always want to plan our trade so we can trade our plan. But also we want to dig in a little deeper as we do our weekend due diligence. That way we can kind of look ahead in the future. So that way we always know kind of what's going to happen before it happens. And for those that are have been new to this, just been kind of watching, you'll notice how pretty accurate a lot of this stuff happens, though there are some instances where unexpected things can happen, but we always want to focus on the majority. And most of the volatility that we see with the entire stock market is usually from economic reports. And that's usually one of the first things that we want to dive into. That way we have a better idea of what each day might be like, as well as other events that will have an effect on the stock market, as well as other industries. And so digging into the economic reports, we always want to look into the website or an application called investing.com. Now I already have the economic reports already pulled up for this coming week. We have Monday, Tuesday, Wednesday, and Thursdays. Typically, these are normally reported on Tuesday, Wednesdays, and Thursdays, but we have a Monday in here, which is great. And that just helps provide more volatility, especially throughout the weekend volatility. And there's going to be a lot of volatility from the weekend that will help just kind of add more fuel to the fire. And so Monday, April 15th, we have two economic reports, and these reports are scheduled to be released 1 hour before the stock market opens. And these are pretty major critical reports because these are a monthly report. And the more rare these are, the more volatile that it's going to provide the stock market. So we normally have a weekly report, monthly report, quarterly, and a yearly report. And so these are monthly, so these will provide a strong amount of volatility, and they do have, and they're related to retail sales. And if you're not sure what these are, feel free to click on them. It will provide a small paragraph of what it is and how it will affect the stock market right below that. And so one way to kind of determine, is it going to provide bearish or bullish characteristics, is by comparing the forecast of what it could possibly be compared to the previous. Now, most of these reports, the report needs to be higher than the previous for it to be bullish. If it's less than, it would be bearish. There's a couple reports that need to be less. Lower the better, which would be the crude oil inventory levels or the unemployment report. And that would be the initial jobless claims. But focusing on the retail sales for Monday, the first one is forecast to be at 0.5%, where the previous was 0.3%. So that's higher than the previous. That's bullish. The other one, which is retail sales month over month for the month of March, is 0.4%, where the previous is 0.6%. So this is providing a bearish characteristic. So we have mixed signals all at the same time. And so this is going to be, it's going to be kind of a tug of war. It's going to be very interesting, where stocks are just going to be, just all over the place, not really in any particular direction. Plus, with some of the weekend news carrying over, that could provide even more volatility. And so, but I'm definitely seeing both kind of a mixture of bearish and bullish, even though when we get into options later, I think we saw more or less kind of a 60% overall calls ratio and a 40% puts ratio. So I think most investors or traders are a little more bullish than they are bearish, surprisingly. Most should really be 50-50. But then we have a Tuesday, April 16th, we have the Federal Jerome Powell that is set to speak at about 1 o'clock Eastern time. And so that's
yeah.
definitely going
That's
to
going to be a good one. I'm excited for Tuesday. I'm going to
yeah.
live stream that for everybody in Robinhood.
Oh yeah, that's going to be a really good one. Good volatility right in the middle of the day. So where sometimes the middle of the day just kind of doesn't really do anything because usually the first hour and the last hour is the most volatile times of the day. So usually after that first hour, usually whatever price that it reaches, it usually kind of stays right around there for the rest of the day. So the Federal Jerome Powell is going to provide some uncertainty, and anytime when we see uncertainty, we see a little bit of bearish characteristics. But after he's done talking, it can easily recover. So just know that we could see a big little V-shape, dip and recovery. Just depends on what he says, but to be determined. So that's why, yeah, we definitely need to focus on that live stream that Dave's going to provide us. And then Wednesday, April 17th, we have the crude oil inventory levels that are set to be released 1 hour after the stock market opens. So again, the first hour, last hour is the most volatile time. So this report is set to be released 1 hour after the stock market opens. That's just going to provide more volatility to keep the momentum going. So that's great volatility, but though we don't have a forecast with that one yet, but we can easily see that as we get into Monday morning pre-market. But this one is a weekly report, very easy to predict whether it's going to be up or down. It was up quite a bit last week, which is bearish. We should anticipate it being down this coming week, which is a bullish. And so Wednesday we should see kind of a bullish kind of a characteristic for that, but it is a weekly report, so it'll be kind of a mild an effect. So the earnings may have more of an effect on certain segments of the stock market than this one, but this will definitely affect the crude oil prices and whatnot. So definitely want to take a look at energy, and energy is really going to be kind of on energy and gold are going to be kind of on the watch list this week for sure, with a lot of the drama and news that's coming from the Middle East. Then we have Thursday, April 18th. We have the unemployment report, the initial jobless claims, and the Philadelphia Fed Manufacturing Index report for the month of April. Both are set to be released 1 hour before the stock market opens. And then 30 minutes after it opens, we have the existing home sales, which is like the used houses, used homes, which holds the more of a bigger number than new homes. New homes typically is right around 600,000 versus 4 million new homes. I mean that's a lot, but it has been coming down every single month, and so it's almost versus when it was during COVID, we were like at 6 million. Now we're at 4 million, so we're significantly a lot less. But new homes went from 400,000 to 600,000. So I mean, new home sales are up like 50%. If you're going to spend that kind of money, you might as well just build a brand new home. So it just makes sense as a consumer part of it. But the unemployment report, it was down a lot last week, down to 211,000 unemployment report filed at a weekly amount, but we expect that number to come up. So that's typically bearish. Because if this exceeds the previous, that's bearish. And then the Philadelphia Manufacturing, which is a monthly report, which will have a more of an effect than the unemployment report. This is going to be less than the previous, so this should also provide bearish characteristics for Thursday. And then the existing home sales also being less than the previous. We see bearish, bearish, bearish. 3 bearish, no mixed signals. It's completely confirmed bearish, unless bad news is good news, which sometimes happens every once in a while. But but this is a lot. This is a lot of bearish, which I think it'll be more bearish than then I think we'll see the bad news being good news. So I think this is just more just plain bad. And so so this is kind of what we're seeing. Monday, mixed. Tuesday, just very volatile in all different directions, up and down. So I would say mixed as well. Crude oil inventories, that should be bullish, at least for energy. So crude oil inventories, oil prices should continue to rise. Unfortunately for consumers, we should see gas prices rise. I would anticipate we're going to see probably a good another 20, 30, 40 cents increase this week on a gallon of gas.
God damn it.
Oh, I know. Unfortunately. But yeah, just kind of be prepared for this week, and then going into our financial earnings releases for this week, going to our website.
Carlos,
yeah,
if I may. So while you're getting that started, and before you actually go into the earnings, if you don't mind, I'd like to do a quick segment on the S&P 500 so everybody has a general idea. So guys, if you'll just take a look at my screen really quick. My name is David Worrell. I am an affiliate of Robinhood Stock Market Watchlist. I do all the live streams and I do your bite-sized data. So if you don't mind hitting a like and a subscribe on my YouTube channel, it's absolutely free and it helps out the channel a lot. And we bring you that bite-sized data so you don't have to know and understand it completely if you have a hard time understanding it. But before we actually get into financials of things, what I like to do is give you an overview, a quick overview using technical analysis. So if you click on my name, you can see my charting screen here. I'll use the technical analysis to give her a better idea of where we sit in the market. So if you're not used to technical analysis, there's a lot of candlesticks. There's a lot of things we do with the chart to help show where people are sitting, where people are staying. So this is very simple, guys. So back from October lows of 2023, so last year, we've been constantly making new higher lows here, meaning we've constantly been on an uptrend. And I'll just draw it for you here now. If we come all the way off this, you can see this beautiful channel that we've been in here, guys. It's a beautiful thing to see with the overall market. When everybody was scared and they were bearish down here, we just continued to make new higher lows. And this is when the start of the AI themes started to happen here, okay? And you can see the QQQs and all the technology-based era just came through and brought us higher. Now, we have finally broke the 21-day moving average. And I've talked about this multiple times, guys, that if we break a 21-day moving average, which let me get rid of this line so you can see it clearer, is this red line. This 21-day moving average has been held multiple times on our way up in this bull run. Now, after we broke through it, I warned everybody, yes, we might pop back up, but look for another pullback. My strategies start to break down when the 10-day moving average starts to curl down. So I've been trying to do my best to be hands-off with my overall trading. Now, where is my line drawn in the sand? Is this 50-day moving average. It's very important because your longer-term investors are having to keep their eye on this 50-day moving average. Now, with the news that's in the market, with everything that's happening, want to see this 50-day hold. Okay, if it doesn't hold, I think we have a lot more room to come down here, guys. A lot more room. Okay, so we need to keep an eye on this. We are in a pullback area. Not saying this is a dire need to make big moves or anything like that, but I like to wait until we start showing new higher lows to start buying back into things. Now, that's not to say this isn't a great area for long-term investors to dollar cost average into as it pulls back. That's personally what I will be doing. I have about $7,000 set aside to slowly buy in as this comes down. No matter where it comes, I'm going to dollar cost average into it. So we want to understand this is where the market's at. We are in a pullback. We are in a long-term uptrend. We are in a mid-term uptrend, but we are in a short-term downtrend currently in the overall S&P 500. Okay, so now that we have that said, make sure you go back to Carlos's channel, the Robinhood Stock Market Watchlist channel, and he's going to go over some of the most recent and most important earnings that we need to keep on our watch list. Please and thank you.
Well, Dave. I'm glad that you brought that up because it's kind of related to something else that I kind of wanted to kind of go over. So traders and investors have this saying called "buy the fear, sell the greed." Okay. And so right now, stocks are, especially, particularly technology stocks, are very high, which again, that's where we want to sell the greed. And buy the fear is when stocks are kind of at their low. Now, there's also a thing called a fear and greed index. That way we kind of know what stage the market is that it's in. And a year, actually even a week ago, everything was greed. Or almost extreme greed, and so it just lets you know, kind of with this market momentum. As we were looking at Dave's screen, I mean, everything was just really up there. Now in a very short period, well, like for example, the previous close was 58, so it was up here right in the green. The week ago it was 62, and you can see where a month ago it was 73. So it was right up here, very bullish. Now in just a matter of a day, we went from 58 to 46, and so and expect it to continue to provide more bearish characteristics. Now, not by just looking at this gauge, but looking at the timeline. If I click the timeline, we can kind of see where it's a normal algorithm, where things go up, things go down, and so
Gotcha. Go ahead.
yeah, I'm gonna mute.
I gotcha.
Okay. So
and
you can kind of see where for the last several months we've been up there, and it's been time for it to come down, and then once it's down, the bottom, we're in the extreme fear. So that's kind of our target. That's kind of the bottom of this particular momentum, but we're still several weeks, if not maybe a couple months away. And once we do hit that bottom, it'll still be probably a couple months until we're hovering right around that. And I'm anticipating, if we look at the timing of things, that's getting closer to the election. And so as we get closer to the election, for the presidential election for the United States, all that's doing is providing uncertainty. Uncertainty meaning where investors and traders don't know what's going to happen during the election, meaning where we don't know who's going to get elected, who's going to get picked, whether it's rigged or not. It all depends who is going to be elected, because every person will favor certain things. For example, let's say Donald Trump, he's more into oil. So if he's elected, then we're going to pump more oil here domestically here in the United States, rather than buying it from Canada and everywhere else, and manipulating the oil inventory levels, making it look like we have a short supply and a high demand. That results in inflation. So if we pump more oil here, increase the oil inventory levels, and make the demand look less, we can lower the barrel of oil, and we can lower the gas prices from $5 a gallon back down to $2.50 a gallon, or whatever it is, and things will, but he may not be so much into EVs. So now EV stocks may go down, oil stocks may continue to do well, but then if Biden is reelected, or somebody else that may favor electric vehicles more than oil. So it just really depends on who gets picked and elected, and that's where we can then figure out then where to invest after that. So it's kind of like buying rumor, selling news, but then it just kind of depends. But with the timing of everything, that's kind of the forecast of what things are looking like. But I would expect that we're going to reach here at the bottom here in the next few months. So but as we mentioned in our last stock market meeting, as one industry goes down, other one goes up. So it's just a matter of knowing which ones those are. So, but yes, let's go to the financial earnings for this coming week. And so, let me scroll down here really quick to that. There's a lot of great earnings this week. Here's the this week's schedule. So if you don't have it, it's in our featured and announcements there in the top part of our group. But the top 10 is, first one is going to be the Netflix, huge company, and it's always been very volatile. Usually the price can move between 5 and 10% in either direction, but Netflix, or the tickers NFLX, is confirmed to release their earnings this Thursday after the stock market closes, and they're expected to beat their estimates. Investors are also bullish going into the company's earnings release, but with a 55% expecting an earnings beat. There was a slight unusual amount or unusual buying calls, $770 call strike price that expires this Friday, not this Friday, but on Friday, June 21st. Dave, do you want to show us what the charts look like on Netflix?
Absolutely. So guys, if you want to come over and click on my name, David Worrell, it's the big head on the pictures. So guys, if we look at Netflix and the longer term, we're heading towards that all-time high of $799, even for that all-time high. Currently sitting at 633, is it? No, 622.83 is the current price action area. So what we like to see, first and foremost, is it above a 200-day moving average? Yes, it is. Also, that 200-day moving average is headed to the north side. We are created a beautiful uptrend off these lows back here from 2022. So what is that, June, sorry guys, June of 2022 was the last time this thing hit lows, and it just started getting bought up, kept making new higher lows, and this thing is just an absolute beautiful stock. Now, even with all the competitors that are around, this thing still is doing it the best. And so I like to see that personally. I don't see them, I can't remember when the news, Carlos, came out when they started cracking down on people using everybody else's Netflix. And everybody was grumpy. You can't share 80 different people.
Oh, yeah.
Your Netflix
Bad news is good news.
Oh yeah, and everybody was grumpy and mad. And they're like, "Oh, everybody's going to cancel the Netflix." Nobody canceled the Netflix. Everybody just bought more.
Oh yeah.
And this thing just went skyrocket. It's beautiful. It's a very nice looking stock. Now, I would have gave a lot of warning if we were talking about it here before this earnings. Simply because of this. This is a beautiful area of resistance. But now look, guys, we are up above that area of resistance. You can see that it kind of shuffled around here for a little bit before breaking higher. Now this thing is just holding on with everything, all the bad news and everything that's going on right now. People still love their Netflix, and it's clear as day. So with the earnings coming up, how much this is going to move, I don't know. But you can see on the past two earnings, guys, it has gapped up beautifully. Now, these aren't buy or sell recommendations. I would never, me personally, I would never play in earnings. I would only play after the earnings. So after this gap up, I might do something like this where I create a trend line and say, hey, and actually I did try and play Netflix. This may have been it, actually. Right here. Yes, this is it, because it had the shakeout day, and I didn't buy it back up after the shakeout day because this had the big gap up, it had the trend line, and then it shook me out right here. I actually got in right here. Right here, I'll just mark it green so you guys have a better understanding and idea. And I'm not one to be ashamed of when I'm getting shaken out of things, because you win some, you lose some. You can't win everything. But this is the whole reason why I wait. I wait to see, because if you were just going to buy this thing could completely go the other way. Even if it was good news, even if it does have earnings beat, the market is constantly trying to take that data and price it in. So where it's at is already priced in for what the earnings should be. So if the earnings aren't nearly as good as what the market has priced it in, but it's still good, it can gap down just as easily as it's gapped up. But what I like to do is I wait till after the earnings, and then I wait for a trend line and a base breakout. Of course, there's more on that strategy. You just have to subscribe to that YouTube channel. But I tell you, Carlos, when it comes to this Netflix, it's a leader in the market. There's a reason why this thing is still up. It's absolutely beautiful. I love to see it, and I have this on my watch list for the earnings. If this has another gap up, I'll be waiting for another play just like this. Just like this.
Oh yeah, definitely. It's got a little bit more to go.
Oh, sure.
Not much more, but it definitely does. I mean, he could easily get back to 700 or pretty close.
Sure. And what's after 700? It's blue skies.
Yeah.
So if this thing can keep going and get above that 700, that's when you're going to see that greed that you just talked about continue higher. But we have to wait until after the earnings to really see its trajectory. So.
Oh, definitely. Yeah,
it's
going to be very interesting. Everyone's going to be watching that one very, very closely. So let's take a look at the next one. If you guys want to tap back into my screen, the next one is, let's see here. It is the Taiwan semi microchips. The semiconductor manufacturing company, or TSM, is confirmed to release their earnings this Thursday morning before the stock market opens, and they're expected to beat their estimates. Investors are also bullish going into the company's earnings release, with an 80% expecting an earnings beat, which I think is one of the highest percentages for this week. And there's been also an unusual amount of buying activity on a $35 put expiring this Friday for some reason. Hopefully, maybe it's kind of been dipping down a little bit where we can kind of buy in and it bounces back up. But let's take a look at Dave's charts on TSM and let's get a better idea of what's going on there.
Okay, guys. So I think we all know that the semiconductors have been an absolute terror lately. Not even lately, for the past almost 3 years now. And then with AI coming about, everybody needs a semiconductor. If they didn't need it already, they want to update their semiconductors. So and correct me, anybody, if I'm wrong, I believe Taiwan Semiconductor actually helps supply NVIDIA. So with NVIDIA being on an absolute tear to the north side, you're going to see Taiwan Semiconductor benefit from this as well. Now, I've heard a lot of different things in the news about a lot of different things happening, but regardless, if we look at the overall technical analysis on this, you can see we've hit all-time new highs just a couple of weeks ago at 158.40, and that's always a good sign for these. Now, a lot of people might say, well, it's at all-time new highs. Why would I buy now? Well, a lot of the books that I've read will always say, buy dear, sell dearer, meaning a stock that usually goes higher tends to continue running higher. Yes, eventually it will pull back. Eventually it will fail. But when we're up here at these highs, there's a reason why we're up here at these highs, because there is a big a big demand for these, and it hasn't met the supply. Now, these aren't buy or sell recommendations. This could easily come back down. But what I'm saying is if we look at the overall trajectory of this, you can see that we have bounced off of a 30-day moving average multiple times. So until this thing breaks a 30-day moving average, which is the yellow line on my charting platform here, as long as we hold this 30-day moving average, this looks very good for TSM. Now, aside from all of that, we're above a 200-day moving average. The moving average is also pushing up higher. So this looks really good for the overall Taiwan Semiconductors, and it's held these highs pretty constructively. Now, this is where it gets a little choppy. This thing's almost gone parabolic, and I'm using that term very loosely here. But when you see a lot of gaps in between here, you can expect a pullback. We've seen that for SMCI as well. When it starts just shooting straight up like this, you can expect pullbacks on that. But what the question is, when these gap up and they move up fast like this and they pull back, how much of their gains are they holding? And you can see here that it kept creating new higher lows. So will this be the new higher low? We will have to wait and see. But earnings is coming out on the 18th. So it's a very good sign for Taiwan Semiconductors. If you don't already have this on your semiconductor watch list, you need to, because it's a beautiful stock.
Oh, definitely. And so it's always important to kind of, if you guys want to tap back into to my screen here, that to kind of make sure all the stars are aligned, and by looking at the graph, the price is very, very high, and it's no wonder why there was an unusual amount of buying activity on puts, and if you're not if you're new to options and don't know what calls and puts are, put is betting against the stock. So for some reason, there's investors that are beginning to bet against the stock because it is priced really high. But also, it's important to know our geographic activities as well. Like, for example, not that long ago, there was just a massive earthquake over there. I think they had like a 6-pointer, 5-pointer, and that there was a lot of damage. There was and it disrupted a lot of things, and so that could also potentially slow down their production now, as well as in the near future or late future. And so that could create a shortage as well as a decrease in revenue and production and whatnot. And so, and even though we have an 80% expecting to beat, this is based off of first quarter. So they can easily say, yeah, we did, but we anticipate that we're not going to do as well during the next quarter. So that they can easily say something that could create fear or something that investors don't want to hear, and that can kind of create a little sell-off. And it probably needs to come down a little bit before it keeps coming up, just like how we kind of saw on some of the other graphs. But don't be confused if there is good news and it's coming down. Get that a lot because buy on rumor, sell on news. And so, but just kind of know that. This has just been some of the recent activity with this particular stock, and this is kind of what we're forecasting for this week. So make sure this one is also on your watch list. Now, I've also noticed I put this out here just so that we know for our future reference. Gas prices are going up. There's been a lot of interesting news on the media lately, and it's kind of triggering people to buy hybrids and all electric vehicles. There is a surge, even though in the last several months we've been seeing a lot of news how there's been a stockpile of electric vehicles. Manufacturers are decreasing their prices. They are selling out. And so just be aware as a consumer, but also an investor, that this is definitely something that's going to help their sales and delivery reports. But also, there's some crazy incentives. Like right now, the Ford Mustang Mach-E has 0% for 72 months. They're giving these things away when they should be marking these things up. And so, but just know that these things aren't going to last very long. And so let me get that fixed there. Okay, so Bank of America.
Buying one? You buying one, Carlos?
Oh, definitely.
Hell yeah.
and I actually prefer the Mustang Mach-E over the Tesla Model 3 because it just has all your normal buttons and controls, and it rides better, and it has this simulated exhaust sound. So when you accelerate, you kind of hear that vroom vroom sound within the Ford.
Okay.
And but it's got a lot of fail-safe features that Tesla hasn't thought of as well. And so it's just a lot better. Plus, it was the second most purchased electric vehicle last year, where the Model 3 for Tesla was number 1. So those two really are the top.
I'm probably going to get a lot of hate for saying this, but I live all the way out here in Monroe, Michigan, and it's kind of a nobody's town. It's in between Detroit and Toledo, so like we're kind of just the stepchild of cities. And I seen for my first time in person a Cybertruck, and oh my gosh, I'm in love. I really am. I think it's the prettiest thing. Oh, it's just so beautiful.
It definitely is, but we're seeing a lot of reports that those vehicles are just breaking down, falling apart.
Oh,
so
I
mean,
know.
It's just it's unfortunate.
They're a new concept.
They're yeah, definitely, and so they got a lot of growing pains to do on that one. But
I'm sure they do.
But
yeah,
but yeah, just know that going in throughout this quarter, I mean, sales and delivery reports are going to be huge, and so we may see people start pumping up Ford Motor Company and Tesla stock prematurely before that particular news comes out. So again, buy on rumor, sell on news. Just be aware of what could possibly happen before it happens. So Bank of America, or BAC, has confirmed the release of their earnings on Tuesday, April 16th, before the stock market opens, and they're also expected to beat their estimates. Investors are bearish going into the company's earnings release, but with a 51.5% expecting an earnings beat. There was also an unusual amount of buying contracts of a $37 call, betting that stock is going to go up by August 16th. And so, but let's take a closer look at Dave's graphs on Bank of America. If you guys want to tune back to his screen.
Yeah, guys. So Bank of America. Now, this thing, I like to look at these bigger bank stocks on the weekly just so we get a better idea. And you can see we're in a huge channel here. The good thing about it is even with all of the rate the rate hikes being held at 5.5%, this thing is still holding off pretty well. And you see that we have this trajectory change right here and a sharp increase in its 200-day moving average. So not only is it above it, but it's also changed its trajectory. And why do we use this 200-day moving average? Because it smooths things out. If we were just going off the candlestick patterns, it would be sharp up and downs, up and downs, up and downs. And if you're a longer term investor, this would shake you out, right? But if you get above a 200-day moving average and the moving average starts to curl up to the north side, it's more of a safe bet. And this is more of a Stan Weinstein stage analysis that I use when it comes to this type of charting, and that's how you see the overall market. And then you can zoom in to a 1 hour if you want to, but for the sake of the longer term stock charts, we like to stay on the daily time frame. So this being a 200-day moving average curling up to the north side, we're having a big pullback here right before the earnings that actually come out on the 16th of this month. So be careful with that, but this might be a great opportunity to buy. We will have to wait until after the 16th, obviously, which is on Tuesday. Actually, is that, yeah, Tuesday. It'd be Tuesday. And after that, we might get a nice bounce off this 50-day moving average. And my guess is, if we look back to the previous times, we've bounced off of it once. Look at this. Right after earnings, we came down, bounced off of it again. Again. This thing is following this 50-day moving average beautifully. So my guess, and I say a guess because you never know what's going to happen after earnings, is a beautiful bounce off this 50-day moving average might be in correlation with its past. So keep that in mind, guys, this 50-day moving average on BAC. Now, it is a slower mover at 1.8%. It's not my kind of stock that I like to play. I like to put my capital to work in faster moving stocks. But if you are more of a longer term investor, this might be something to keep on your watch list. Carlos?
Oh, definitely. That definitely looks good, but just know that, with these national banks, when it comes to their interest rates, when it comes to like auto loans, they're pretty competitive compared to credit unions. It used to be the other way around before COVID. Credit unions had a much lower interest rate than these national banks. Now it's the other way around. But also we're going more into credit card debt. And also, I think more auto repossessions. And so banks are struggling, but at least these national banks are more competitive than what they ever used to be before. And so, but it's going to be very interesting. We're definitely going to see more volatility with these, and it's definitely not the financial stock season. This is kind of linked in with technology stocks. So as technology goes down, we should see the financial stocks go down as well. So, but definitely let's keep a close watch on that one as well. Now, throughout the weekend, there was also a Biden impeachment live event going on. So that's just more fuel to add to the fire, mixed in with all the other news that we've had throughout this weekend. And so now Goldman Sachs is also expected to release their earnings on Monday morning, so tomorrow morning before the stock market opens. Their ticker is GS, and they're expected to beat their estimates. Investors are also bullish going to the company's earnings release, but with a 46% expecting an earnings beat. Very, very small percentage for being so bullish. But on April 12th, there was an unusual amount of buying contracts of a $425 call that expires on Friday, April 19th. Dave, let's take a look at Dave's graphs and charts really quick on GS. Dave, you're on mute.
Thank you, Carlos. Yep. I appreciate that. I was ready and raring to go, fired up about Goldman Sachs here. Nobody could hear me, but no, we got, so this is another bank stock, and you can see I have it marked out for an alert for its all-time highs. The whole reason why I wanted to know when it hit all-time highs, because this would be a great area to actually take a quick short. You can see it didn't even make it up to that, came close to that 420 area. If you got them, smoke them. This came right back down here, and you can see that it's in a consolidated area. Now, this consolidated area, you can see that it bounced off this 50-day moving average multiple times. You could see that same issue with Bank of America. So Goldman Sachs, but the difference here is Goldman Sachs broke through that 50-day moving average, okay? Now, it's coming right back down on this area of resistance. I can just go ahead and draw like an area of resistance for you. So this is its area of resistance. Actually, as I should say, because we're above the resistance, technically this would be its support. So I can expect that with on the same side, earnings beat, we're probably going to bounce off of this and continue to head higher. But on a longer term, we are above a rising 200-day moving average, and it looks just like Bank of America's trajectory where we have this complete change of trajectory here, like an episodic pivot. We bounce off of its all-time lows right here. We push back up on higher volume, and as it carries higher, you can see once we break through that 200-day moving average, it starts to curl up and starts heading to the north side. And you can see if we look back here, this same type of trajectory happens over here. It breaks down, it creates a new low. I'm sorry, not a new low, but it bounces off of its previous low. It shoots up higher, and then it has this beautiful curl to the north side and continues higher with some pullbacks, like you can see here, a pullback, a pullback. So if we are just going off of past, which not, you know, the past doesn't predict the future, but it does help give a sort of a guideline here. This breaking down below the 200-day moving average, the curling, it starts to curl back down. It starts to break up above. It trades sideways. So this is what I would consider a stage 3, and then, or I'm sorry, 4, and then this is another stage 1 using the Stan Weinstein's stage analysis. So that being said, ladies and gentlemen, this here, even though it looks kind of scary with the pullback in the overall market, this has an area to be support and could bounce and continue higher. So that's just looking at the overall market. Goldman Sachs is a slower mover. It moves the same as Bank of America at 1.8%. So this is more of a longer term play, a buy and hold, but these aren't recommendations of any kind. Carlos?
Yeah, let's take a look at the next earnings release, which is UnitedHealth or UNH for the ticker. And they're also scheduled to release their earnings on Tuesday morning before the stock market opens, and also expected to beat their estimates. Though investors are bearish going into the company's earnings release, but with almost a 65% expecting earnings beat. So which is right about average. Anything above 65% is, I would consider, above average. Anything less than that would be considered below average. Now, on Friday, April 12th, there was an unusual amount of buying activity on a $425 put. So investors are betting against this stock for some reason. But let's tune to Dave's graphs and charts on UnitedHealth Group.
All right, guys. I'm going to pull something up for you really quick because I want everybody to kind of understand what I'm talking about when I say stage analysis, because I believe that this is a beautiful chart. So the stage analysis that Stan Weinstein talks about looks just like this, okay? You can see we have a trajectory in stage 1, stage 2 it heads up, stage 3 it trades sideways, and stage 4 it starts to come back down. Now, we've seen this chart in all different types of places. Stan Weinstein is where I learned it from. The whole reason why I'm bringing up the Stan Weinstein stage analysis is because this is a beautiful example right here on the weekly. You can see on the weekly here, this is my 30-day moving average in the yellow. You can see it moves up in a stage 2. It trades sideways in, excuse me, in a stage 3. And now look, it's breaking down below the 30-day moving average and heading into a stage 4. So stage 1, stage 2, I'm sorry, this is stage 1, stage 2, stage 3, and now we are starting to head into a stage 4. Now, stage 4 doesn't mean it just goes straight down like it looks like it does. We're probably going to see some bounces, but our trajectory that we look like we're heading in is to the downside. Now, on top of all of that, we just broke below a 200-day moving average. And if you guys have watched me or are a part of any of my YouTube videos or seen me, or if you've had me do any analysis for you, you will know that anything below a 200-day moving average, I don't care for. So this is below that 200-day moving average. That's not to say it's not going to pop back up and start to head lower, making new higher lows. What I mean by that is we might go from here to here to here to here, making new higher lows. It might pop back up to here, head back down, pop back up to here, head back down, pop back up, and continue to just smother itself and head back down until it creates new higher lows eventually, okay? So you can see this beautiful trajectory here. I'm not saying that long term that this thing is probably going to continue to head to the north side, but for now, its midterm and long-term trajectory is going to be down for the next, I don't know, if I had to guess, I would say for the next 3 or 4 months. Okay, that's a guess. It's my thoughts, not yours, so these aren't buy or sell recommendations. But we can clearly see that using the Stan Weinstein stage analysis, we are in a stage 4 for UNH. Now, we can zoom back into the daily now, and you can see on the daily time frame, this is very volatile in the past few days, okay? It's just been ripping to the downside. So I'm expecting a bounce. Now, I don't care what the earnings come out and say, I do expect it to bounce. Whether it's good news or bad news, I expect to see a bounce, but on the daily, we are clearly under a 200-day moving average, and I do expect this thing to continue lower. So I know that was a little long-winded there, Carlos,
no
but
worries.
I use that stage analysis quite a bit, and I just wanted to give an explanation.
Oh, so. Definitely. No, it looks good. And if you guys want to tune back to my screen, if you may have noticed that we're seeing a lot of that, and then kind of comparing it with the whole fear and greed index, and with the stock market and the economic cycle that we talked about last meeting. I mean, it should start making more sense to you that we're entering this bear market again as we approach the election of uncertainty. After that, that's where we should start seeing things start to improve at that point. But it always takes about a year for the next president to kind of clean up the previous president's mess. And so even though we may have a new president, going into next year, it's still going to take all of next year to clean up the previous president's mess. And so, and last meeting we talked about the stock market and the economic cycle, and the market bottom, the market top, and the early recessions and other recessions. Well, as we're approaching the full recovery, and that's where we see a lot of economic reports. Oh, the economy is really strong, which is one of the reasons why we haven't lowered interest rates yet, because our economy is still too strong. And so, in fact, it's one of the reasons why we probably shouldn't lower interest rates, because otherwise it could cause inflation to go up. But it's just, like I said, it's just really important to know, these things, that we're always aware of what's going to happen before it happens. And so the next earnings report is the ASML. So they're obviously part of technology, as well as in the semiconductor industry as well. They are scheduled to release their financial earnings this Wednesday, April 17th, before the stock market opens, and they're expected to beat their estimates, though investors are bullish going into the company's earning release, which is great, with a 56% expecting earnings beats. There was also a slight unusual buying activity on a $1,100 call that expires on Friday, June 21st. That means investors are betting that the stock is going to continue to go up between now and then. And so, but let's take a look at Dave's graphs on ASML really quick. You guys want to tune his screen really quick?
So I like when we get something a little bit more volatile here. 2.4%, so a little bit faster than the Goldman Sachs and the Bank of America guys, almost by double actually. You could see that we had a big push up on the last earnings, holding all of its gains after its earnings. This thing never looked back, creating new higher lows each week. Guys, this is a beautiful stock to at least keep on your watch list to see what is to come ahead. So with the earnings coming out on the 17th, we are trading sideways currently. And if we break above this base here of 1,000, almost even, which is a psychological area of resistance, and it's just kind of trying to hold this 50-day moving average right now. Even if it were to trade sideways for another 2 or 3 weeks and get tighter here, that would be even better. That'll help join forces from the supply and the demand, so it would give us a better opportunity on our risk management. So if this thing can just tighten up here and get tight for a few more days before breaking up higher, that would be a great sign for ASML. Of course, being in the semiconductors, this is looking like a leader because it is at all-time highs. Aside from the Taiwan semiconductor that we've seen before, you can see it is not at all-time highs. Your NVDA is going to be your leader in this, okay? So I imagine that if NVDA continues to go higher, you will see ASML go higher. If you see NVIDIA go lower, you're probably going to see ASML go lower. So regardless of what these earnings come out, rather than it being crazy beats, so if this thing beats like an unexpected beat and a ton of volume comes into this, that could be an episodic pivot for ASML, aside from trying to follow NVDA. So that's the biggest kind of catalyst differentiator that's there. If we get a big pocket of Wall Street surprise and we just see people trying to jump in over each other, I still think NVDA is your leader in this overall market, and ASML isn't going to make a move without following NVDA. So if you're going to watch Taiwan or ASML, I would definitely watch NVDA to help guide you with ASML.
Oh, definitely, definitely. We're going to see a lot of volatility with all these semiconductors this week, as well as AMD. So make sure we put these on our watch list as well. Be sure to tap back in onto my screen. Let's take a look at the next financial earnings this week. Is Johnson & Johnson, or J&J. It is confirmed release their earnings on Tuesday morning before the stock market opens, and they're expected to beat their estimates. Investors, however, are bearish going into the company's earnings release with a 61.5% expecting an earnings beat. There was also an unusual amount of buying activity on a $170 call, betting the stock is going to go up by Friday, September 20th. And so, but let's take a closer look on Dave's screen, because there's definitely a lot of mixed signals here between bearish and bullish. Let's see where Johnson & Johnson's at.
Sure. So guys, just bringing up the stage analysis one more time. If we use this stage analysis to help depict what's going on, it's on a weekly time frame. Stage 1, 2, 3, and 4, right? So now if we look at our chart on a weekly time frame, this is the 30-day moving average. You can see this is a 1, this is a 1, this is a 2, this is your 3. You can only guess what this is, right? Below a 30-day weekly moving average. Now, if we head to the daily, we can obviously see this thing's well below a declining 200-day moving average. This thing is heading down to its recent lows. We might get a bounce off of this, but I'm expecting it to stay smothered below its 200-day moving average and continue this mid and slightly long-term trajectory to the downside. So we can see that Johnson & Johnson and UnitedHealth, which is UNH, I believe, that we just looked at, are looking quite similar, and I believe they're closely in the same sector. On a side note, I was watching SWV, Schwab, SVW, SWAV, yeah, SWAV actually just got bought up by Johnson & Johnson. And I was really excited about this one because it was getting really tight on this 10-day moving average, but it won't go any higher than this anymore because Johnson & Johnson decided to buy these guys up. Okay, so on that side note, Johnson & Johnson still buying companies up. They're still doing big things, and that's what good companies do to help their longevity of the overall company. They buy bigger and better companies. So anyway, I went on a little tangent there, but you can see just like UnitedHealth, this thing has a long-term trajectory to the north side. It's kind of a big boat. So as it starts to turn, it turns. It's going to come back down. Maybe it's found its low, but we will have to see. With the earnings coming up, it's going to be on the 16th. So keep an eye on that because from the way the technicals look on this, guys, we might get a nice pop off of these most recent lows. So we'll see. We'll have to wait and see what happens on this one. But I don't like it. It's below a 200-day moving average, so it's got a lot of catching up to do before Johnson & Johnson starts looking a little better for me.
Oh, definitely. Yeah, if you guys want to tune back to my screen here, yeah, definitely, it's interesting. A lot of these stocks we're looking at look very, very similar. We're just kind of getting ready to have a little correction, while other stocks like energy and gold are continuing to rise. It's already up, I think, 15, almost 20% just for this year, and so which is absolutely a lot, for those. Now, the next financial earnings is United Airlines, or UAL for the ticker, is confirming the release of their earnings on Tuesday after the stock market closes, and they're expected to beat their estimates. Investors are bearish going into the company's earning release with a 40.5% expecting an earnings beat. Now, on March 25th, there was also an unusual amount of buying activity on a $55 call that expires on Friday, the September 20th. However, that was a good several weeks ago, and a lot could have changed between now and then. But it's definitely going to provide a lot of volatility, not just for United Airlines, but other competitor stocks too, like American Airlines and Boeing. But let's take a closer look at Dave's graphs on on United Airlines, and let's take a look.
Sure. So, guys, when I look at UAL or United Airlines, you can see we had this huge pullback here, and we've just been trading sideways for many, many years now. So let's see, since 2020. So 2020, we had this big pullback, and we've never seen those highs since. And it's just kind of trading right around the 200-day moving average. So I don't know what kind of trader you are. If you're more of a long-term trader, which I'm assuming most of you are in here, buy and hold for dear life. This isn't one. This is kind of a park and hide your money. I wouldn't expect to make a bunch of money off this unless you were playing in this range here. And what do I mean by that is we have a range of this low and we have a range of this high. And if you were going to play in between this, that might be a good idea, or anytime it got above a 200, you can short. Anytime it got below a 200, you could short. But playing in between this range of 55 and 33, a $20 range would be a beautiful way to play this thing. Now, with the earnings coming out, the only thing that would change my mind about United Airlines is if we had a big beat and it really showed that something has changed and gave some form of catalyst to United Airlines in its earnings that surprised and woke up the market that wasn't already priced in. So unless we're playing in between this range, I'm kind of hands off this stock. But of course, you never know what's going to happen during earnings, and that's why we go over these guys, because it's good to keep the big boats on your earnings watch list. Because if you don't have a plan to trade one of these, and then all of a sudden it just gaps up, and then you're trying to ingest all the information, and it's up over 65, you still have another 25 bucks. It can go straight up, so keep that in mind. You might want to keep this on your watch list, and even if you put this on your watch list and say this thing gets a nice gap up to 55, it might be a good area to short, or sell calls on, because you think it's going to head lower. So
Yeah, all to be determined. It's just kind of right in the middle, so we'll definitely have to put that one on our watch list. But yeah, if you guys want to tap back onto my screen, let's take a look at the Charles Schwab or SCHW for the ticker is confirmed to release their earnings on Monday morning before the stock market opens. They're also expected to beat their estimates. Investors are also bullish going into the company's earnings release with a 68.5% expecting an earnings beat, which is, like I said, right about average. Now, on Wednesday, April 10th, there was an unusual amount of buying activity on a $70 put. So sometimes we always want to follow the money because that way we always kind of know, where the money's going, and this is showing that they're betting against it. And as we've seen a lot of the graphs and charts, a lot of things are kind of starting that downtrend, and again, that's something that can last for weeks, if not months. But let's take a look at Dave's graphs on this stock. If you guys want to tap back on his screen, let's take a look.
So guys, I'm going to go over this quick because we already went over two other banks, and it looks quite similar. But I will say with Charles Schwab, this looks a lot better, and I'll tell you exactly why. So let's just zoom back here, okay? Now, Bank of America and the other one that we looked at, excuse me for not remembering right off the top of my head, but we have this downward trajectory. Now, if we look at the 200-day moving average, the second it breaks above it, we can see it curling up to the north side, just like we see with Bank of America, okay? Now, what do we have? Another downtrend here, right? Another keel over, a turnover on that 200-day moving average. What happens when it breaks that 200-day moving average? Well, we have a sharp upturn here. Not only do we have this sharp upturn that we can use its past to kind of take a look at, where we might have further trajectory to the north side, but we also have this trend line that we're breaking. Okay, you can see that this is what I love about this break. Okay, we have this trajectory, right? And it comes up, it breaks the 200-day moving average. The 200-day moving average starts to curl to the north side. Not only that, but as it heads back down, it finds some support here off of a previous low, creates a new higher low, and then breaks this trend line to the north side while this is continuing to curl. So I am personally expecting Charles Schwab, as well as the other two banks, but more Charles Schwab than anything, even though they all look kind of the same. I'm expecting this to continue higher. Okay, so you can quote me on that one, but don't buy. These aren't buy or sell recommendations. Keep this on your watch list. This is a beautiful area. Now, it's a slower moving stock at 1.8%. It moves about as slow as the Bank of America. And Carlos, what was that? What was the other bank? I'm going to look because I'm sick of Goldman Sachs. Yeah. That's it. So Goldman Sachs was the other one. Yeah, thank you. So Goldman Sachs, Bank of America, Charles Schwab, the financial sector has been doing pretty well in its ETF. Which I believe is XLF is the one I follow. Yeah, this is the financial sector. And you can see it's just had a big pullback. But look at this run up, guys. What a beautiful run up here. And it hit all-time new highs, okay? And it hit all-time new highs last month. Last month on the 28th. And now we're having a pullback. This pullback doesn't scare me. This doesn't scare me at all. Now, I think the issue we're having with this big pullback is we went from having 3 rate hikes to the end of the year to now, if you look at the federal rate pool, you can see that we're most likely only going to have only two Fed rate cuts. So that is giving an overall trajectory down to the south side, because that's really, really bad news for the banks. As to where when we started to go dovish, we started to head to the north side. And if you guys remember, there were banks and a lot of things being liquidated right around here. And when everybody was scared and feared, they had all that fear, I actually drew this box out. And I said, well, we have an area of support here. I don't remember which banks they were, but there were some big banks that were getting liquidated. This is about the same time when FTX, Sam Bankman-Fried was getting charges against him, and all this crazy stuff was happening right here. But I seen the support, and we had support once, twice, 3 times, and now we're gone, making new highs in the overall financial ETF. Now we're having a big pullback, probably because we're only expected to have those 2 rate cuts, but it's a good sign for the overall market because it gives us a chance to get in. Now, again, it's only 1.8%. And I just realized I said I was going to be quick with this one, but here I go rambling again. But guys, keep Charles Schwab on your list. This is a beautiful stock. And if you're into the financial institutes, this is giving you an opportunity to get in. So that's what I got for you, Carlos.
Oh, definitely. And it's definitely a clue to kind of, again, kind of where we are headed with our, our economy and our, and the stock market. And so, again, I think I just uploaded it here to the, let's see, where did I upload it here? Maybe long term. Okay. Again, I showed this to you guys last week. Make sure you tap into my screen here. This is the stock market and economic cycle. So the blue line, which is the economy, the red line is the stock market. The X that I have here in yellow is where I believe where we currently are, which is usually depends on what's going on, can be very easily to be determined with certain events and the graphs and stuff. And so when we are at the market bottom, like for example, during COVID, when they shut down the economy, all financial stocks, technology stocks were on their bottom, and that's where we want to buy those. We're at the market top. These stocks are the ones that are high. The ones that are at the market top here, the basic materials, and which is like Lowe's and Home Depot, energy stocks like ExxonMobil, BP, and whatnot. Staples, which is like retail stores like Walmart, Target. These are all very, very low stocks, and they've been trending up now. We've been talking about these for months. That these are stocks that are up now 10, 15, 20%. And where technology stocks are down that, and so it flip-flops, and that's why it's important to know, but also to know kind of where we're at. So the stock market, which we have a lot more to go, and then the blue line, the economy, with the full recovery. That's where the economy is at its strongest, and that's where we're hearing a lot where the government doesn't want to lower interest rates because the economy is just too strong yet. But once one of the reasons why the market also comes down, not only because an election, but because the investors know that even though the full recovery is near, the early recession is right around the corner. And so that's a lot of fear and uncertainty, and politicians or world leaders could manipulate the economy, basically pouring more fuel in the fire, making a bearish market more bearish. And so it just determines on what that is. But this is kind of like the layout. It's a cycle that repeats itself over and over, so it just makes it more predictable, and that way we know what stocks or what industries are going to do what. So this is in our chat room. If you didn't download it last week, I definitely recommend downloading. I have it in the long-term 401k room right there. So last but not least, we have American Express, or AXP for their ticker, is confirmed to release their earnings on Friday, April 19th, before the stock market opens, and they're expected to release their or to beat their earnings. Investors are also bullish going into the company's earnings release, with a 56% expecting an earnings beat, but at least it's not mixed. We're not seeing bearish and bullish. Plus, we see that there was some unusual buying activity on a $170 call strike price. So we're seeing unlike a lot of these other ones we've seen a lot of mixed signals: bearish, bullish, buying puts, or when they're bullish, or buying calls when they're bearish. And this one is definitely going to be very interesting. But let's take a closer look at this one on Dave's graphs and charts really quick.
Yeah, guys, AXP, American Express, we can see we're getting a little bit of a pullback with the rest of the stock market. A, and with the rest of the banks, B. Just trying to hold on to this 50-day moving average. We haven't seen this 50-day moving average since November of last year. So this thing has been on a nice bull run, due for a pullback. But if it can hold this 50-day moving average, that would be a good sign for AXP. Now, we can see a lot of wicks on the bottom on the daily. I do like to see that. It shows that there is buying power, but I think this needs a few more days, and that's about all the time it has until earnings on the 19th. So make sure you're keeping this on your watch list. We might see a nice pop on earnings. Everybody's swiping those credit cards, and I don't think they're going to stop anytime soon, especially with the with the Fed rate hikes being where they're at. People are turning to their credit cards to sustain their type of living. So make sure you keep this on your watch list. And guys, I do just want to take a quick second out to say thank you. Thank you, Carlos, first of all. Thank you for having me. Thank you for letting me be a big part of your show and letting me post my YouTube channel in your Facebook group. Thank you for letting me be an affiliate of your group. And guys, thank you for having me today. If you don't already know, my name is David Worrell. You can check me out on YouTube. It is David Worrell. There's a space in between there. I have it up on my screen. So thank you for having me. I'm going to take off now. I got a little bit, I'm Eastern time, so it's about 10:15 here, guys. So I'm going to go spend a little time with my family before I go to bed. And I appreciate you guys so much. So thank you so much for having me.
Thank you.
Yep, and just one last thing, guys. If you subscribe, or even if you don't, I will be in the Facebook channel, and we will be giving you the bite-sized data for all the information that we went over in the beginning. So Monday we have the that bite-sized data coming out, and also Tuesday, Papa Powell, as like we like to call him, is coming out, and he will be doing his speech, and that will be very volatile, as Carlos spoke about earlier. So keep that in mind. I will stream that live. I will be here with you to help go through a little bit of all of that. So make sure you stay tuned. Make sure you subscribe. And once and last but not least, thank you so much for having me. You guys take care, okay?
Absolutely. Thank you, Dave. You guys just tune back to my screen really quick. We're just going to take a quick look at last Friday's stock options activity. And that way we kind of see where things ended at, and then we see right here that the Apple, we have Apple, Tesla, Nvidia, AMD, and Amazon, both the top 5. But also within the bar chart website, you can also go to investing. There's a lot of different areas here you can go to check out other stocks, and oil stocks and gold stocks, like I said, are the ones that have been trending up a lot. So be sure to take a closer look at these ones, sort them out by volume, so that way they're ones that show the most interest. These ones are the oil, and then again the gold stocks right here. Plus you can do ETFs if you want them more in groups, but definitely check those out really quick. But definitely want to thank everyone for coming. You guys, hopefully we'll see you guys again next week.